Welcome to the weekly economic calendar for the week of March 20, 2023, brought to you by Augustcool Research. Hit the like button and subscribe to our YouTube channel to receive notifications about our content. This week is a relatively light week in terms of the amount of economic data to be released, but Wednesday's Federal Reserve decision on interest rates may be one of the more important policy decisions and signals we've seen in several months. Monday begins with the Producer Price Index data from Germany, where the consensus view is the year-over-year change will be around 12 to 13%, down from the previous reading of 17.8%. ECB President Lagarde also plans to speak on Monday. While the ECB website hasn't posted the agenda for her speech, we can expect last week's rate hike to be a part of the conversation. In the comments provided after the rate hike decision, the ECB emphasized uncertainty around the baseline assessments of inflation and growth. Prior to these latest developments, the baseline path for headline inflation had already been revised down, mainly owing to a smaller contribution from energy prices than previously expected. ECB staff now see inflation averaging 5.3% in 2023, 2.9% in 2024 and 2.1% in 2025. At the same time, underlying price pressures remain strong. Inflation excluding energy and food continued to increase in February, and ECB staff expect it to average 4.6% in 2023, which is higher than foreseen in the December projections. Subsequently, it is projected to come down to 2.5% in 2024 and 2.2% in 2025, as the upward pressures from past supply shocks and the reopening of the economy fade out and as tighter monetary policy increasingly dampens demand. The only major data coming on Tuesday is for retail sales, with the Redbook Index results for February, and existing home sales data for the month of February. The Redbook Index is a sales-weighted of year-over-year same-store sales growth in a sample of large U.S. general merchandise retailers representing about 9,000 stores. The Redbook number has come down over the last several months, from highs of 9 and 10% year-over-year in December 2022 and January 2023, to under 3% in the March 14 data release. The existing home sales, released by the National Association of Realtors, provide an estimated value of housing market conditions. Existing home sales in the U.S. are expected to remain steady at around 4 million units. UK consumer price and producer price data will be released on Wednesday. But all eyes will be on the Federal Reserve's rate decision scheduled for 2 o'clock Eastern Standard Time. Before last week's banking crisis, the Federal Reserve was all but certainly going to keep charging forward with its fastest rate hiking campaign since the 1980s, approving the 9th consecutive rate increase. Fed Chair Powell was even warning that officials may go with a bolder half-point hike if inflation and the job market stayed hotter than expected. Fed officials have two main choices when deciding how to fight inflation while also dealing with the U.S. bank blow-ups. They can either turn a blind eye to it and stay focused on price stability, continuing to fire away rate hikes despite the risk that it could add more tension to the banking sector. Or they can hold for now to give the financial system time to stabilize, even if it comes at the risk of keeping price pressures hot. Complicating the Fed's dilemma even more, prices in February rose 6% from a year ago, a slightly slower pace from January's 6.4% pace, according to the Department of Labor. But prices actually heated up when you squeeze out food and energy costs. So-called core inflation in February climbed from the previous month at the fastest pace since September. Rising shelter costs contributed more than 70% of the annual inflation increase, with rent prices climbing 8.8%, the Department of Labor release also showed. Separate data from the Department of Labor showed job growth boomed faster than expected in February. Had Silicon Valley Bank and Signature not failed, economists said both reports would be enough to prompt a faster half-point move from the Fed. The bank failures of the past week have pushed financial stability issues to center stage, but inflation remains in the spotlight and is part of its dual mandate along with maximum employment. Investors are still unclear on what to expect. Market participants on Tuesday saw a near 80% probability of a quarter-point hike in March, according to CME Group. By last Wednesday, those odds had fallen to nearly 48%, with the chances of no move seen at nearly 52%. Economists aren't even yet sure what the Fed will do. Goldman Sachs said in a note to clients late Sunday it no longer expects the Fed to raise interest rates at its March meeting. Moody's Analytics, meanwhile, said Tuesday it expects the Fed to pause in March before raising interest rates by 1/4 point in May and June. Bank of America and Citigroup, however, both see the Fed following through with a rate hike, granted at the smaller 1/4 point pace. Along with its rate decision, Fed officials will also update their projections for the U.S. economy and interest rates through 2025, including where they see the federal funds rate, unemployment and inflation heading. Market participants don't see the Fed lifting rates much further from here. Investors now see borrowing costs peaking at 4.75 to 5% by May, just 25 basis points from its current level, before cutting them 100 basis points by the end of the year, CME Group data shows. But the inflation fight isn't over. Core prices are expected to rise 5.04% in the first 3 months of 2023, according to the Cleveland Fed's nowcast, which is updated daily based on current economic indicators. A survey of professional forecasters poll from February predicted those prices would rise 3.8% over the period. Abandoning the inflation fight too soon could make prices stickier and even lead to more financial stability risks down the road, especially if the Fed has to end up playing catch-up. On Thursday we'll get the Bank of England's interest rate decision. The BOE faces a similar situation to the Fed, so there is uncertainty whether UK rates will be increased this month. A 1/4 basis point hike seems likely, not enough to fully fight inflation risks, but small enough to avoid turmoil in the banking sector. Thursday also brings employment data from the U.S. with the continuing jobless claims and the initial jobless claims. New home sales data for the month of February will also be released. Friday's only major data release is Japan's National Consumer Price Index for the month of February. That's it for this week's economic calendar. Thanks for watching. Please give this video a like if you find it useful, and subscribe to stay informed of future content on our channel. For more about us and what we do, follow us on Twitter at Augustcool, or visit our website at augustcool.com.